These are the top 5 monthly dividend stocks to beat inflation. Inflation is like Thanos. It's inevitable. But as we all know, there is always an Iron Man to save the day. In the modern era, Iron Man is none other than a monthly dividend. But with so many fish in the sea, which one should you grab? Well, in this video, we will talk about 5 monthly dividend stocks that will help you to beat inflation. Without any delay, let's get into it. Horizon Technology Finance. Since it's been operating for a while, Horizon Technology Finance has built a solid reputation for its proficiency in offering services to the technology sector. The business finances startup venture capital firms. The business has so far invested in more than 285 different businesses across a range of industries, including sustainable energy, healthcare, and information technology. One of the few businesses that actively invests in startups is Horizon Technology. As a result, Horizon Technology has an advantage over rival businesses. Prior to its IPO, it can make investments in the most promising businesses. Because of its focus on early-stage investing and diversification, Horizon Technology is a terrific option for investors seeking long-term development, as evidenced by its second quarter performance. In terms of profitability and revenue, the corporation fared better than analyses have predicted. The business has closely monitored its credit ratings as it's grown. As a result, 96% of Horizon's loan portfolio has a credit rating of 3 or higher. The business is in a strong position going forward because of its expanded lending capability. Additionally, for the past 10 years, Horizon has continually paid dividends. As a result, you can invest your money safely and receive a monthly salary. AGNC Investment. In Mortgage Real Estate Investment Trust (REIT), AGNC Investment is a leader among companies that pay monthly dividends. In 12 of the last 13 years, AGNC has paid out double-digit dividend yields, making it an excellent income choice to combat inflation. The possibility of higher interest rates may actually make it more expensive for mortgage REITs to borrow money on short notice and may slightly reduce their book value, but the longer-term effects of the Fed's change in monetary policy should be favorable for the AGNC. The yields AGNC receives from the mortgage-backed securities or MBSs it buys are projected to increase as lending rates rise. Long-term growth in the company's net interest margin is to be anticipated. The propensity AGNC Investment has for acquiring agency securities is another positive aspect of the company. In the very unlikely case of a default, the federal government will support an agency asset. As you might guess, this additional production reduces the yield AGNC may anticipate on the MBS it purchases. On the other hand, it also enables the business to use leverage securely to increase its profit potential. Mortgage REITs frequently trade at their individual book values, thus at 82% of the book value, AGNC can be a complete deal. EPR Properties. Even if corporations do nothing wrong, they can nevertheless become exposed during a bear market, which is one of its worst effects. EPR's properties are a prime illustration of this occurrence. The business is a publicly traded real estate investment trust that specializes in properties with an emphasis on leisure, education, and entertainment. Ski resorts, water parks, movie theaters, golf courses, and educational facilities are all part of the EPR's portfolio. Its long-term strategy involves making investments in premium assets that produce a steady stream of expanding cash flow. The varied portfolio of EPR helps to reduce the effects of any one property or industry cycle by giving exposure to a wide variety of growth drivers. EPR is therefore well positioned to produce excellent results for its stockholders over the long run. With the pandemic behind us, the stock was all ready for prime time this year. The corporation concentrates on the entertainment aspect of things since that's what the consumers desire. However, this year's rising interest rates and the REIT's insolvency present a challenge. The money spent on leisure activities has increased over the past 20 years, with only very tiny pauses during recessions, as Charles Sizemore, principal of Sizemore Capital, notes. EPR is doing pretty well on its end. In the second quarter, it outperformed Wall Street forecasts, increasing its projection. The amount spent on investments at the halfway point of the year was $239.2 million, and the company anticipates that pace to rise significantly in the second half. Altria Group. Altria Group, the world's largest producer of tobacco, is the fourth ultra-high-yield dividend stock that can help investors beat excessive inflation. Even if Altria's share price has only climbed by 324% over the past 20 years, the company's total return, which includes dividends, has increased by around 3,200% during the same time. That's the dividends power in action. In one sense, the tobacco stock's peak period of expansion has passed. Adult smoking rates in the United States have significantly decreased over time as a result of increased knowledge of the negative health impacts of tobacco use. On the other hand, the tens of millions of smokers who are still around have shown a readiness to put up with the regular price increases to maintain their habit. Despite a 7.5% loss in cigarette shipments in 2021, Altria had a much more modest decline of 1% in smokable product revenue for the entire year. Its payment benefits from its very high pricing power. Altria has not been hesitant to invest in the future. Along with making significant investments in heated tobacco and smokeless goods, it has purchased equity positions in the vape startup Juul and the Canadian cannabis stock Cronos Group. Although for the time being they only generate little revenue, they have a faster potential for sustained growth than the company's traditional tobacco division. Although the tobacco sector isn't particularly interesting, it has historically provided stockholders with generous returns. Gladstone Capital. Gladstone Management, which consists of various parts, is the bigger framework under which Gladstone Capital functions. The organization as a whole is managed by Gladstone Management. Gladstone Land, a diversified REIT, is another significant business operating within the larger umbrella. It offers vital services to funders such as leasing and selling farms. Josh Inomoto stated that Gladstone is, quote, basically related to our national security, end quote. Considering the specialized service that it offers, there is a merit in suggesting this. A corporation called Gladstone Capital makes investments in other businesses on behalf of external investors. Due to its business development company form, investors receive all investments income and capital gains. It receives a tax exemption in exchange for this. The middle market companies that Gladstone Capital focuses on with EBITDA in the $3 to $15 million range include those. The typical investment amount is in the $7 million to $30 million range. As of June 30th, 2022, the portfolio's total asset worth was $312.9 million. It includes a variety of businesses such as eateries, producers, and other types of businesses. Now that I've told you about the 5 monthly dividend stocks, you might also know why you should want to buy them. Well, allow me the honor to tell you the benefits of monthly dividend stocks. Cheap monthly dividend stocks can be a terrific method for retirees to fight inflation. Or anyone for that matter. As a matter of fact, it doesn't matter if you're retired or not. This kind of investment offers a steady and regular stream of income that may be used to assist in offsetting growing living expenses. Now you know everything. You know which stocks to buy, you know why you should buy them, and you also know what to expect. So this was it from my side, but there's always more that you can learn about in investing, so why not check out more videos that you can see by us? Don't forget to hit the subscribe button as well, as we'll be bringing you more content exactly like this one. Goodbye for now, I'll be waiting for you in the next video.